And now to China, where the world's second largest economy grew at the slowest pace in 6 years. And as Eunice Yoon reports from Beijing, investors are now looking to see whether the government will take any additional steps to pump up growth.
China's GDP came in at 7% for the first quarter. This was largely in line with expectations, but it's also the slowest level of growth this country has seen since the depths of the financial crisis. Now, the focus was on the March data. Instead of the pickup that everybody was expecting, we saw a tapering, and that suggested to many people here that the economy is decelerating and headed for even slower growth. Now, the data also raised expectations among economists here that policymakers are going to have to step in and take some action, some combination of interest rate cuts or cuts to the RRR, which is the amount of cash that banks have to have on hand in reserve. The authorities, though, don't seem to be hitting the panic button just yet. In the run-up to the release of the data, the Chinese premier actually came on state radio and spoke to the public directly to say that there's a downward pressure on the economy, but that everyone needs to adjust to this and that the country needs to prepare for even further economic challenges. The employment number came out at 5.1%. And the interesting part was the commentary around it, because officials said that the jobs market here is stable. For time and again, the government has said that the employment is really going to determine just how aggressive the government is in trying to prop up growth. For Nightly Business Report, I'm Eunice Yoon in Beijing.